So if you're an Australian investor, you probably know the feeling. You're watching the local property market and it just feels like you're being squeezed out, right? In this explainer, we're going to ask a really big question. Could your money be working a whole lot harder somewhere else? We're putting Dubai head-to-head with Australia to find out.
Let's just dive right in with this quote because it really says it all, doesn't it? That feeling of climbing Mount Everest without any oxygen. It's just exhausting and feels impossible. But what if there was a totally different mountain to climb? One with a much, much clearer path to the top. Let's go explore that.
Okay, first things first. Let's really diagnose the problem right here in Australia, because that squeeze that investors are feeling, it's not just a vibe, it is written all over the numbers. Just take a look at this. The gross rental yields for units in Sydney and Melbourne are barely scraping by, hovering under 4%. And remember, that's before you even think about mortgage payments, maintenance, taxes, the whole shebang. It means your massive capital investment is working on an incredibly tight margin right from day one. And you know, it's not just about the low yields. The real sting comes from how taxes basically bookend your entire investment. First, you get hit with a hefty stamp duty just to get in the door. Then, when you decide to sell, you've got capital gains tax waiting to take a huge slice of your hard-earned profit. All right, now let's completely switch gears and take a look at Dubai. It's a market that operates on a totally different set of rules, and for many investors, it creates a much, much clearer path to actually making a profit. And boom, this number right here illustrates the core difference perfectly. 7.12%. That's the average rental yield for apartments in Dubai. We are talking more than double the returns you're seeing in Australia's biggest cities, and that's right off the bat.
The tax story is just as powerful. Instead of Australia's complicated tax burden, Dubai has this simple, one-time 4% transfer fee you pay to the Dubai Land Department. And the best part? When you sell, there is zero capital gains tax. Every single dollar of profit is yours to keep. It's a total game changer.
All right, so we've set the stage. Now let's really get into it and crunch the numbers in a direct head-to-head comparison. This is where the story gets really, really interesting. So this table right here, this is the heart of our comparison. Just follow the rows across. A two-bedroom apartment in downtown Dubai, it's less than half the price of one in Sydney CBD. The rental yield? Well, it's more than double. And the mortgage rates? Significantly lower. I mean, the numbers here don't just talk, they shout. Let's just pause on that price point for a second, because it is staggering. Your barrier to entry in a prime global city is less than half of what you'd face in Sydney. Let me put it another way. For the price of one Sydney apartment, you could literally own two in downtown Dubai. Now that completely changes the calculation of what's possible for your investment capital. So it all comes down to this financial trifecta, right? Your rental yields are nearly double, your cost of borrowing money is way lower at around 3.9%, and on top of that, there are no annual property or land taxes just chipping away at your returns year after year. Every single part of the equation just works in your favor. But look, a smart investment isn't just about the numbers on a spreadsheet, is it? Let's look at the other incredible benefits that come with putting your capital into a property in Dubai. Now this is a massive draw card for a lot of people. An investment of over 2 million dirhams, that's about 820,000 Aussie dollars, makes you eligible to apply for a 10-year renewable residency visa. It's a direct pathway to securing a long-term future for you and your family in a major global hub. And think about where your investment is actually located. Dubai is at the literal crossroads of the world. This strategic position fuels constant demand from international professionals and businesses. And get this, the currency is pegged to the US dollar, which gives you this fantastic layer of stability against foreign exchange risk. So what does a booming population mean for a property investor? Well, it's pretty simple. Sustained demand. With population growth hitting 5% just last year alone, you have this constantly expanding pool of potential tenants and future buyers, which is what underpins the long-term value of your asset. Okay, so maybe you're intrigued. The numbers make sense, the perks are definitely appealing, but where would you actually start? Let's look at a few key strategies and popular locations. A really popular strategy in Dubai is buying off-plan. So think of it like this. You're buying a property before it's even built. This lets you lock in today's price, often with just a 20 to 25% down payment. And then, as the property is constructed and the area around it develops, its value can increase. That means you've built equity before you even get the keys. It's a seriously powerful way to maximize your returns. Now, if your number one goal is seeing your property's value grow over time, Downtown Dubai is the blue chip choice. It's the epicenter of the city, home to landmarks like the Burj Khalifa, which ensures there's always going to be consistent global demand and strong capital appreciation.
But if you're an investor who wants to attract high-quality, long-term tenants, Dubai Marina is a top contender. That waterfront lifestyle, the restaurants, the amenities, it creates this resort-like feel that's always in super high demand.
And finally, if your focus is purely on maximizing your month-to-month cash flow, Jumeirah Village Circle, or JVC, is the hotspot. It offers some of the highest rental yields in the entire city. We're talking often over 8%, and at a more accessible price point.
So let's bring all of this home. When you strip everything else away, what's the fundamental difference for an Australian investor who's looking at these two very different markets?
It really boils down to this. In Dubai, the numbers are just stronger from day one with much higher rental yields. The system itself is simpler, with way fewer taxes eating into your profits, and the opportunity is just bigger, with amazing perks like a direct path to long-term residency. It's a framework that is literally designed for growth.
You know, when you look at all the data side by side, the contrast is, well, it's undeniable. Your capital can work, or it can work hard. The evidence really suggests there's a powerful alternative to the traditional path of Australian property. So the only question left is the one on your screen. Where will you choose to build your wealth?